you overweighted China already in November. Let's take a look at their performance on a long-term basis here on my Bloomberg. I can see that China is still outperforming its emerging markets. The MSCI emerging markets, that would be the line in blue, China, the line in white. So you're making a call for China when it comes long-term. What about the volatility that we see now?
Well, we think China will continue to outperform the rest of emerging markets as it has done over the last 5, 10 and 15 years. And the driver of that is superior ROE and earnings growth over the cycle compared to the rest of the asset class. China actually is also somewhat less volatile than the overall EM index. We think particularly now when the economy has recovered quite nicely, we're kind of exiting a period of deflation, the renminbi has stabilized, then yes, China can continue to outperform, probably with lower volatility.
Are we talking about these new economy calls, the IT sector and so forth?
Yeah, so what we like within the China market is what is higher revenue growth, higher ROE, less levered, and that's IT, consumer and healthcare in particular. But we also recently added back financials and some cyclicals exposure. We did that in the third and fourth quarter last year, seeing that improvement in the macro in China. And
you sent us this very interesting chart, Global Emerging Markets Funds. That was based on your own calculations that global EM funds are near record underweight in China. Why is this significant?
Well, it is one of the ironies of the situation that, as we were just looking at, China has significantly outperformed EM over the cycle over 5, 10 and 15 years, yet at no point in the last 15 years have even specialist emerging market managers been overweight China. They've always been underweight. So
right, and we're taking
zero.
A look at this, below zero, almost at negative 5.5% in 2017.
So that means 500 basis points below the index benchmark weight. Now, that's not to say that at times China hasn't performed poorly. We ourselves downgraded China in the summer of 2015 at a very different cyclical position to what we're seeing now. But I think there's always been this skepticism about the sustainability of China's growth model, and flowing from that concerns over bank credit and the NPL situation in China. And I think that's often missing the point that China's growth is self-funded, and there are plenty of other drivers of growth in China that go beyond credit, particularly in the consumer and services sectors.
What about the Chinese stocks that are trading in Hong Kong? Of course, we're talking about H shares. Now, they're defined technicals. What are they? Right now, RSI showing that they're overbought or that they could be overbought. What's happening there? Is that just a valuation issue?
Well, the H shares broadly sit within the MSCI China universe, so that's the superset, as it were, that includes the US-listed ADR. So they're part of this overall bull story. Yes, right now they do look technically overbought. As you mentioned at the top of the show, we went overweight in November. We're still happy to retain an overweight call right now, but the whole of emerging markets is being bid up as the dollar has entered a somewhat more stable zone and as global economic activity is surprising on the upside almost everywhere. So we're in a reasonably bullish environment.
And you were telling me about the volatility in mainland Chinese markets actually not being as high as in other emerging markets. If you compare it to what's happening in Hong Kong as well, where the market is red hot, does that mean that maybe mainland markets are not as relevant anymore?
Well, actually, if you look at just the last year, the mainland equity markets haven't been that volatile, but they've certainly been historically extremely volatile, particularly in 2015. We're also bullish on the onshore markets on Shanghai, and that's really a story of rotation from bonds and property back into stocks by the domestic investor. And indeed, the domestic investor, high net worth individual, and the insurance companies in China, they're starting to take more advantage of the Southbound Connect program here into Hong Kong. So we've got this more generalized bull market developing both onshore and offshore at the moment.